Many guides start by promising 100% ownership and 0% tax. In 2026, focusing on these 2 points alone leads to unexpected tax liabilities as your business grows. This video is produced by Best Solution. We have formed over 5,000 companies since 2003. A free zone remains the fastest route to launch. Choosing the wrong jurisdiction requires substantial capital to unwind later. Success depends on your income staying qualifying after your business is fully operational. This timeline outlines setup. Step 1 is defining your exact legal business activity. This dictates your license and visas. Licensing activities you do not actually perform increases setup costs. This also creates friction with corporate banks. Step 2 is selecting from more than 40 free zones. You must match specific sector rules to your model. Selecting a zone based on price alone creates operational friction. Match the zone to your actual customer locations. Step 3 is registering as a free zone establishment or company. This defines the number of allowed shareholders. Step 4 is submitting 3 brand name options. Using offensive or religious terms causes immediate rejection and delays. These 4 steps form your legal foundation. Mistakes here require a complete and costly legal restructuring to fix. Step 5 is leasing workspace. A flexi-desk or fitted office satisfies the mandatory registered address rule. Selecting a flexi-desk saves money up front. However, this choice restricts your future visa quota as you grow. Step 6 is applying for initial approval. Certain activities require third-party sign-off, which adds weeks to set up. Step 7 covers visas and banking. Sponsoring team visas require corporate banking approval, the most difficult setup hurdle. This chart reveals the total cost. A budget package at 4,888 dirhams only covers the license. Service businesses require 13,000 to 22,000 dirhams. A trading company needs up to 35,000 dirhams. Location drives the price. A premium Dubai zone increases costs by 30% over Sharjah or Ajman. Secure funding for your entire first operating year. Budgeting only for the license fee risks failure mid-year. This flowchart tracks revenue. Determining where 80% of your revenue originates identifies your correct jurisdiction. International revenue works well in cost-efficient zones. Mainland revenue requires complex tax and banking discussions. International Free Zone Authority suits broad services. Dubai Multi-Commodity Center aligns with global commodities brands. Affordable zones like Ras Al Khaimah Economic Zone suit tight budgets. They lack the recognition of premium Dubai zones. Operating in a free zone requires corporate tax evaluation. The 0% rate is conditional. Failing to qualify moves your business to the standard 9% corporate tax rate. This checklist tracks tax compliance. Condition 1 requires real people and premises within the country. Condition 2 requires qualifying income. Revenue must come from outside the country or other free zone persons. Condition 3 sets a ceiling. Non-qualifying income must stay below 5% or 5 million dirhams. Condition 4 prohibits mainland election. Choosing to be taxed at the standard rate ends your exemption permanently. Condition 5 requires audited financial statements. This adds mandatory accounting overhead regardless of company size. Missing one condition strips your 0% rate for the current period and the 4 following periods. A consultancy starts with international clients. They correctly qualify for the 0% tax rate. After 6 months, they add several mainland clients. Their business model shifts while their structure remains the same. This shift causes them to lose their qualifying status. They face a massive and unexpected tax liability. Best Solution reviews your future revenue projections to prevent this. We have formed over 5,000 companies. Ordinary business growth is a hidden risk. It can break your 0% tax rate without warning. This matrix outlines banking. Your business model and documentation dictate success rather than the prestige of the zone. Software and consulting businesses see smooth approval. Crypto and general trading face slow and heavy bank scrutiny. Digital banks like YO or Mashrek Neo open accounts in days. They may lack complex trade finance facilities. Selling to the mainland requires a distributor or a dual license. This adds operational complexity and cost. Growing mainland revenue from 5% to 70% requires a new legal structure.
The mainland offers direct local sales. Free zones offer lower setup costs and faster ownership processing. Comparing zones only on price is a mistake. A cheap setup often fails the business within 6 months. Adding unrelated activities increases your setup fee. It also increases bank scrutiny on your corporate account. Free zones allow 100% foreign ownership. The cheapest northern zones rarely fit complex business activities. Clarity of activity and customer location are the most important factors for your initial setup. Successful founders optimize for their year 2 revenue model. They do not shop for a day 1 budget. Takeaway 1. Choose your zone based on where 80% of your revenue originates. This prevents structural mistakes. Takeaway 2. Treat the 0% tax rate as a conditional status. This protects your business as it grows. Takeaway 3. Plan banking around a specific activity. A clear revenue story leads to faster account opening. This content is produced by Best Solution. We are Dubai's leading company formation specialist since 2003. Visit bestsolution.ae for a free consultation. Visit our Business Bay office for a session. Do not let the wrong decision cost you more time and money later.